7 stocks I'm buying, April 2024 edition. Welcome in, folks. It's my favorite video I do on this channel. Each and every month, we're about to get into the 7 stocks that I'm buying April 2024 and why I'm buying these stocks. What type of upside do I see here? The risk, all those sorts of things, okay? Appreciate y'all joining me as always. All I ask in return for putting together this beast of a video for you here today is make sure you hit that like button. Okay, that's all I ask in return. You hit that like button, folks, and I appreciate you in the biggest way. If you enjoy these videos each and every month, you can make sure you're subscribed here to the channel. Also, want to make a big announcement. First time I've ever announced this. April 15th, we're going to do a one-day sale for the Patreon tier, $69 to get access to my #1 course ever, Become a Master Stock Market, be able to see the moves I'm making each and every week, the buys and the sells, and be part of that Discord chat. That will be pinned comment down there, and you can go out and fill out a form, and we'll go ahead and send that deal over to you on April 15th. It's a one-day sale. We haven't done a deal in there since November. I know a lot of people have been wanting me to do something. So also, make sure you create a Patreon account right after you do that, because you can't get the deal if you don't have a Patreon account, okay? All right, guys, let's get in these 7 stocks up here, okay? First one up here is Tesla Maesla. One of the best stocks over the past 5 years, but one of the most hated stocks in the market recently, okay? Now, for me personally, if you haven't been following me for very long, I've been a Tesla shareholder for many years. Owned this stock since 2019. I've owned it in much more controversial time periods than actually now, believe it or not. Back then, it was a whole different craziness, okay? Now, the 3-year chart of Tesla's bad, right? The stock's down over 20% in the past 3 years, and it's done a whole lot of nothing. The articles out there, the media, it is very negative, right? As the EV decline continues, a bright spot emerges in the solar sector. Tesla's awful quarter has Wall Street on the edge ahead of delivery numbers. Tesla stock might have had its worst quarter ever. I mean, these are the sorts of headlines out there around Tesla right now. It's not good, okay? It's bad, 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 okay? Tesla bulls turn bearish as nightmare. First quarter comes to an end. So, as a long-term investor, somebody that's focused on more than tomorrow in the next month, you gotta zoom out a little bit. You gotta zoom out a little bit to get the full picture of what's actually going on with Tesla and where this company is going over the next 5-10 years. Me as a long-term investor, I don't care what's going on in the next month, 3 months, whatever. All that stuff passes. I care about where this company's at 3 years from now, 7 years from now, 10 years from now. That's what matters to me. And that focus over the long term is what has gotten that, $252,000 in gains there, not getting caught up in all the short-term stuff, because there's a lot to get caught up into, okay? Listen, here's the deal, okay? This is another period of lower growth for Tesla where people are saying Tesla's big growth days are done. Okay, so it's not the first time. This is actually the 4th time in Tesla's history this has happened. Back in 2010, this happened. They only grew revenue 4% that particular year, and people thought, oh, that's it for Tesla's big growth. I mean, it went from 20,000% growth, 600% growth to 4%. That big growth is done, okay? Then back in 2015, the company only grew 26% in that particular year, which was very poor growth for them compared to those previous years. Then people were predicting, okay, the big growth for Tesla's done. Back in 2019, remember I told you I started buying the stock 2019, right? Man, oh man, they were all out. Tesla only grew 14% that year. And people said, oh, Tesla's big growth days are done. That's a thing of the past now at this point in time. And this past year, they grew revenue to nearly $100 billion. It was 18% growth. And guess what? People are saying, once again, Tesla's big growth days are done. Maybe 4th time's a charm. I don't think so, okay? Now, I also thought this was fascinating. This was a bad year for them, 2023, right? They still upped their revenue $15 billion year over year. That's insane. Think about this. Back in 2017, the company's entire revenue was $11.7 billion. And they just upped their revenue $15 billion in 1 year. That's incredible, right? Now, we have Cybertruck ramping. Cybertruck's the most talked about, debated vehicle in the history of mankind. There's never been anything like it. I mean, it's just absolutely ridiculous. The amount of people that have an opinion about Cybertruck. They love it. They hate it. Best vehicle ever, worst vehicle ever. Holy smokes. Everybody's got an opinion on Cybertruck. And that's exactly what it was designed to do, I think, at the end of the day. But production is ramping and going very well in regards to Cybertruck, okay? Now, Cybertruck also, it's going to be very popular. They're going to have a whole bunch of different paint films and wraps you can get, which, it's always been very popular to get your Teslas wrapped. Actually, both my Teslas are wrapped. I have a Model X and a S Plaid. Both of them are wrapped, and I know a ton of people that get their 3s wrapped, Ys wrapped, and now Tesla's offering that in-house. That's going to be huge profits for Tesla now at this point in time. Now, there was something fascinating when Tesla's latest earnings came out. Services and other gross profit was up substantially for the company, nearly $500 million in a 3-month span. That's incredible, right? Or excuse me, for the year overall, nearly $500 million. Now, that's from, look at this, back in 2019, over $500 million gross loss for the company. So we're talking about $1 billion turn in just a few years there. That's phenomenal, right? And this segment has 20 plus years of growth ahead of it in terms of the service segment. That's insane. By the way, energy business, no one ever talks about it, pays attention to it. Everybody's always focused on how many 3s and Ys are they selling. Look at energy storage deployments, how much that was up in 2023, right? Now, U.S. EV market just passed the 1 million sales mark in 2023. And guess who's the dominant player there? It is good old Tesla, with over 50% market share, right? Now, when it comes to Tesla, this company is so set up, so phenomenal for the next 10, 20 years. And the reason being is we know there's a huge transition going on to EVs. That's not going backwards. We're going toward this, okay? And when it comes to the EV wave, essentially, you're gonna have to prove if you're a competitor to Tesla, you're gonna have to prove you have a better product somehow than Tesla, right? And that's difficult because Tesla is known as an EV company. All these other guys, it's like, do you really want to buy an EV from them? It's no different than if Tesla was selling internal combustion engine vehicles. Would you really want to buy an internal combustion engine vehicle from Tesla? I don't know, right? You might want to stick with somebody that's been doing it for a long time. That's a problem for all the other players. And speaking about all the other players, the competitors, right? They're all now trying to partner with Tesla. You got Ford, BMW, Genesis, General Motors, Honda, Hyundai, Jag, Kia, Lucid, Mini, Mercedes-Benz, Nissan, Polestar. We'll see if they're even around in the future. Rivian, we'll see if they're even around in the future, right? Lucid, that might be one that's out. I think Rivian will make it long term. Toyota and Volvo, all those companies have all announced partnerships with good old Tesla for their supercharging network now at this point in time, right? Now, this just opens up a whole bunch of possibilities over time. I see a day where Tesla could be selling battery packs to all their competitors, right? It would just make sense. I don't think any of their competitors are going to be able to have the battery technology Tesla does. I think all their competitors are still trying to catch up to where Tesla's at. Where do you think Tesla's going to be 5 years, 10 years out, right? That's just insane. FSD, none of these other competitors, once again, of Tesla have anything to compete with FSD. So I think this is another thing. They're going to end up having to partner with Tesla on this because Tesla's going to solve the problem before these other guys are going to solve it. And so they're either going to have to still try to figure out and pump billions of dollars into that for 5, 10, 15 years and hope they someday land FSD, or go ahead and partner with Tesla. Tesla can license the technology and make some sort of subscription fee on that. That's more probable than not, right? So you have all these big auto companies that are more than likely going to have to partner with Tesla more and more over time, right? Now, this just got announced here. Tesla will let buyers try its FSD system for free. And I'd reached out to some people over the past few months, and, because I thought this was very, very important to have essentially a free trial of this. I thought it was extremely important. I'm still pushing, by the way, for $99 a month. We'll see. Okay, we'll see. Right now it's $199 a month. I'll need $99. If they can get it down to $99, we're really talking. I think this is going to take off massively. We'll see, okay? But this is a step in the right direction, a free trial for that, okay? Now, Tesla's growth recap. Here's what we got going on. Continued electric vehicle adoption, which is just going to continue over the next 10, 20 years, right? International expansion, which Tesla's really started to expand international in quite a substantial way over the past 4 or 5 years. They're going to continue to expand international. Cybertruck, that's just starting to ramp, as you see there. But, that's got years of ramp ahead. Demand is endless, basically, for Cybertruck over the next few years. Number 4, Model 2. That's going to be their under $30,000 vehicle. That's likely coming in the next year or two, Elon says. FSD is looking pretty good. I'll say that. They're making huge steps in the right direction. I think they're way ahead of anybody out there. It looks like, they'll be solved, let's just call it sooner rather than later. Supercharging network. Huge opportunity. Obviously, if you're doing any sort of road trips, you got to charge up. And sometimes you might be in the city driving a lot. You charge up as well, right? That's a huge opportunity for not just them, but if somebody buys another EV, they're going to have to charge at the Tesla superchargers, right? Other services opportunity, which the services opportunity, that's where you make a lot of money. Energy business expansion, services on all that energy business. Because let's say, Tesla's building this, building that, went to energy business. Over time, things break, things fail, out in the weather, right, out in the elements, and Tesla makes services money off of all that, right? Model 3 and Model Y are still young. Let's keep that in mind. Most vehicles mature in terms of sales numbers around when they've been out about 10 years or so. The Model 3 and Model Y are still very young vehicles overall, right? And then there's a robotics opportunity that's massive for Tesla long term as well. Now, the company looks rich, right? 57 forward P roughly, right? So let's call it 2 to 3 times where the market trades at. But I think they're going to be able to eat up that forward P over the next 2 to 3 years. And the reason being is I think they're going to start going up on pricing in the back half of this year. We're already starting to see some signs that they're starting to wiggle pricing up in some markets. I think prices will really start going up back half of the year, right? So that's going to help out the company's margins in profitability in an immense way. Costs, we know Tesla just continues to bring down cost of making their vehicles over time, right? Cybertruck margins should be insane once they get that baby all up and ramped. I mean, the first half of the year, margins will be rough there, but once they have it ramped, margins should be incredible. For trucks, usually the margins are the highest, right? And then the services opportunity, that's straight profit. And so that 57 forward PU, I think, will get eaten into very, very fast, and that EPS is going to skyrocket over the next few years. We're likely bottoming out margins and profitability likely in the next 3 to 6 months, and we're going to head up from there, essentially, okay? So that was Tesla. Number 2 of 7 here is Cheesecake Factory. Dividend and value play here. This stock has not done well over the past 5 years. Now, that doesn't really matter. It's going to do very well over the next 5 years, in my opinion. Forward P on the stock of 11, 12 range, a dividend yield of 3%, right? So I get paid just for holding the stock. Market cap on this one under $2 billion. Cheesecake Factory has over 200 company-owned restaurants. North Italia, they believe they can fit at least 200 restaurants. I have no doubts. I think they might be able to build more North Italias long-term than Cheesecake Factory. And the comps out of North Italia are ridiculous, okay? They only have 37 locations. They have so much expansion there over the next 5 to 10 years. It's ridiculous. Flower Child is another one that I think they'll have hundreds of locations over the next few years of Flower Child. Culinary Dropout Blanco, they have these other concepts as well. They're also expanding how many restaurants they're opening per year, 13 in 22, 16 last year, and they're planning 22 units this particular year in 2024. They do the highest volume, the highest unit volumes out of any of the big chain restaurants out there, beating out Maggiano's, Texas Roadhouse, BJ's, Olive Garden, Longhorn, Outback Steakhouse, and all those, right? And moderate check compared to some of these other guys as well. And then 20% plus off-premises sales, which means it's not just counting on people coming into the restaurants, okay? Now, if we look at the comps here in the latest quarter, 2.5% up for Cheesecake Factory, 7% for North Italia. Very impressive, because Darden's latest quarterly numbers, they basically announced that same-store sales of Olive Garden, which is their highest revenue contributor, fell 1.8%. And Darden's total same-store sales fell 1.8%, right? And so when you compare that to Cake's doing pretty flippin' flapjacking good compared to Darden, the big dog, right? If we look on a 2-year stack, comparable sales, you're going to find that Cheesecake Factory beats the restaurant industry by a large margin in terms of their comps. If the market's bad, Cheesecake Factory does less bad than everybody else. If the market's really good, they do better than everybody else, okay? Also, durable business over time. This is very important right here. Look at that adjusted earnings over time. This company's gotten through the great financial crisis, stayed in a good place financially. They got through Rona. I mean, the worst case situation, they got through high inflation. And yet, despite all that, they make it out to the other side. So Cake, I want more shares this one. I can never get enough, just like I can never get enough Cheesecake Cake. 1,323 shares I own in the public account right now. I own shares in other accounts as well. I mean, Cake's just a buy. Give me every share in sight of that one. Number 3 of these 7 stocks up here is Shopify. Shopify, $77. I wish it was $77.77 right now. $77 stock here. This stock has done pretty decent over the past 5 years, 300% gainer on a Shopify. Now, I have a big position in Amazon, $190,000 here. I have an Amazon up to $77,000 on that one. You might say, how can I own Amazon and own Shopify? Two very different business models. The way these companies operate, Shopify is very asset light. Amazon's very asset heavy. Amazon, I get AWS along with it, as well as a bunch of other businesses that they own, right? Whole Foods and Zappos and Twitch and all these other businesses. Shopify is much more streamlined, okay? So they're very different, investment cases, I guess you can say, okay? Here's the deal. Shopify has 20% plus growth a year for like the next decade. Like there's no time period. When I look at all the different growth verticals for Shopify, I don't see them not growing 20% a year on average for the next decade. Like, it's just ridiculous in terms of the growth of this company. And the impressive thing with Shopify, you usually think about it just in terms of, you got a small business, you're selling to consumers online, you use Shopify, right? It's not just that. They're actually starting to get into a lot more stores. Look at this. They achieved $441 million in offline revenue in 2023. That's 5x versus where they were at in 2019. Business-to-business gross merchandising volume in Q4 was up nearly 150% year over year. So Shopify is becoming more than just a B2C play, and that's very going on like beneath the surface and very, very fascinating overall. I did a super in-depth video, 27-minute video about a month ago on Shopify stock. So if you care to hear me talk a lot more about Shopify specific, go on my channel here and go down. Click on that video from a month ago, buy Shopify stock and don't stop. It's a very in-depth video that goes super in-depth into Shopify there, okay? Fourth one of these 7 stocks, buying, is Nike. Nike stock has gone nowhere the past 5 years. Absolutely nowhere. What a golden opportunity. What a golden opportunity this is, okay? Here's the deal. With Nike, I'm getting one of the most high-quality companies in the world, right? Not debatable, that's just like fact, right? One of the highest quality companies in the world, where the stock price has gone nowhere for 5 years. I look at that as a blessing that I can find that quality of a company that has, stock price has done nothing for 5 years, okay? The way you think about it is, imagine you want to buy, a piece of real estate in New York City, in Manhattan, and prices hadn't gone up for 5 years. You'd be like, thank goodness, man, because prices usually go up here a lot. I appreciated that the prices didn't go up for 5 years. That's how I feel in regards to Nike. No, you might look at the forward P, 24, 25, somewhere around there. You might say, isn't that a bit rich versus, the market? Okay, maybe a little bit, but it's not that rich. And let's say it even is rich, right? Slightly expensive versus market. I think it's justified, and for 3 core reasons. One is, I never had to explain what this company is, what they sell, what they do. You know that already. You know that. If you are watching this video and you don't know Nike, you must not exist on the planet. You're not human, okay? That's all I got to say. That is so powerful. When you can say a name and people's mind automatically understands all that companies that they sell that product, they sell this stuff. That's insane, okay? Absolutely insane that you got a company like that. Because there's very few of those companies that exist on this planet where you can say that, and, most people would be like, oh yeah, I know that company, okay? Second thing is, their company's about to get much more profitable over the next 2 to 3 years. Nike announced they're going to lay off workers. They got a $2 billion cost-cutting plan. They're going to strip out a bunch of costs from the business. Overall, they've gotten over-bloated over the past few years, and they're going to cut that down. So the company's going to emerge much more profitable over the next 2 to 3 years. Now, on top of that, okay, I'm getting a pretty stable business. This goes all the way back to the 1990s. Nike's revenue all the way back to the 1990s. Now, there's a few periods in here, since back in the 90s, where the company had trouble growing for a little bit, or the revenue declined for a particular time. But overall, the trend is your friend, okay? Nike is a company that pretty consistently grows and grows and grows. Is this year going to be some exciting growth year for Nike? No, okay? No. But with that being said, this is one of those companies that over time is going to grow, and there's going to be a day when Nike's doing $100 billion of revenue and 150 and 200 billion, okay? And so I think that's pretty powerful. Overall, I look at Nike, it's a sleep well at night stock. It's a value and dividend play. It's one of those stocks you got to have in your portfolio. I think Nike will outperform the S&P 500 over the next 5 years, and it will do it pretty easily, in my opinion. And remember, Nike's divs and stock price appreciation over the next 5 years. So yeah, wasn't a great stock over the past 5 years, right? And I'm happy I wasn't part of that for the last 5 years. But the last 5 years, the last 5 years. All that matters to me is what happens with Nike over the next 5 years. And I think it's going to be pretty darn good, okay? Alrighty, guys, the fifth one, the 7 stocks I'm looking to buy. This one's actually not a stock. It's an ETF. It is SQQQ. So this, for me, is a hedge. You're going to understand, I have a lot of money in a lot of big tech companies, NASDAQ companies. Some of my biggest investments include Meta. That is actually my biggest investment in the public count, over $800,000 in that stock. Tesla's my second biggest position in the public count, and Amazon's one of my biggest positions in the public count. I own Shopify stock. I own Palantir stock, right? I own a lot of very NASDAQ-related companies. So if the NASDAQ were to crash, my portfolios would get hit very heavily, because if the NASDAQ were to, fall 10, 20, 30, 40%, whatever, okay? Amazon's getting hit hard, Meta's getting hit, Tesla's getting hit, all those type of stocks are getting hit, right? If that were to play out. That might not play out, but I like to have insurance. No different than you have auto insurance or homeowners insurance, renters insurance, health insurance, those sorts of things, just in case, right? That's me when it comes to hedging. Just in case a big recession comes, a stock market crash comes, whatever, I have some SQQQ, okay? And I want to buy more SQQQ. So this is basically a 3x inverse index on the NASDAQ on a daily performance. So the way to think about this is, if, let's just say hypothetically, the NASDAQ went down, 15% over the next 2 months. In theory, the NASDAQ should go down something like 45%. It's not going to be perfect because it's based upon a daily basis, but it'll be something roughly in that area. It won't be perfect. It could actually be more. It could be a little less. It's somewhere in that area roughly, okay? So the moral of the story is, in regards to this, is it's a good play if you're afraid there could be problems in the market in the short term. You need insurance for your portfolio. That's what this is. And no different than auto insurance. I don't plan on using my auto insurance. I hope every dollar I spend on auto insurance, which I don't know how much my auto insurance is, might be $300, $400, $500 a month. You can look at that as throwing money away, or you can look at it as, I'm glad I didn't get in an accident. It was there in case I needed it, right? That's exactly how I think about hedging. I hope SQQQ just goes down over time, because as long as that happens, I think Meta's going to be doing phenomenal. Amazon, Tesla, all those sorts of stocks, right? Palantir, Shopify, all those are going to be, if this baby keeps tanking, I'm going to be looking good. Now, I also spoke recently, and I don't want to turn this into an hour-long video speaking about macroeconomics and the market and all those sorts of things, because I spoke about that very extensively. I got the 27-minute video 2 days ago, why I'm getting cash heavy, and I got this video from 3 days ago, 63,000 views. I'm warning all investors right now. Those get into my concerns with the overall market in terms of the indexes, okay? I think there's so many tremendous opportunities out there in terms of individual stocks and ways to make money in the market. But with that being said, the index opportunity is not, let's call it, as good, in my personal opinion. Okay, so those videos get really in depth. So if you want to watch those, go ahead and watch those. Okay, I think those ones will help you out. Next one up here, number 6 of 7 is Wynn Resorts. Wynn Resorts. So this company's had to go through a brutal past 4 years. They had to deal with Rona, which they have properties in Macau, which are, right outside China. And so at the end of the day, Macau was basically closed down for several years, okay, or limited in terms of how it was open. So they had to go through that. And then also high interest rates, right? Interest rates obviously rose substantially. And anytime you've got any sort of debt-laden company, which, Wynn Resorts, they're not going to spend, $5 billion out of pocket to build a new resort. They're going to take on debt to do that. No one wants to own those sorts of companies when you're in a higher interest rate environment, right? Now, in terms of Wynn, they own the 2 most luxurious properties and high-end properties that attract the biggest money folks on the Las Vegas Strip, Wynn and Encore. And they also own all this land back here, which they use currently as a golf course, okay? Beautiful golf course. Now, over time, if they want to build more towers on that, or they want to build convention space on that, or whatever. That's just an opportunity. They also own this piece of great real estate right here, right across from the properties, that they could easily build a tower on in a facility that connects over here and maybe has convention if they wanted to do that over time, okay? So that's important to understand about Vegas. Then in Macau, they have these 2 beautiful properties in the older part of the Macau Strip. Okay, those two Wynn properties. And then they got Big Daddy, which is Wynn Palace, which is on the newer part of the Cotai Strip. That is, that's Big Dog there, okay? And I don't even think we've seen the best days of this, because this was really starting to ramp, and then we got hit with Rona, right? So I think the best days you'll see of Wynn Palace will be, 3 years from now, 5 years from now, 10 years from now, in my opinion, okay? And then they also operate this property here. They no longer own the building. They sold that to one of those like REIT type companies, okay? But they still operate the property, the gaming facility, the rooms, and those sorts of things. And this is right outside Boston. Now, they also have in construction a integrated resort with gaming in the Middle East. Yeah, in the UAE, which is, we know in the Middle East, they got a lot of money over there. And some people, speculate that maybe people aren't going to want to game because, trust me, they're going to be there, okay? They're going to be there. And there's a lot of oil money over there. Ooh, baby, there's a lot of money in Dubai. Oh, my gosh. And there's, nothing like this that exists over in the Middle East right now. But there's going to be, from my understanding, they just broke ground last month, from my understanding, in regards to that. And they now have the website up, Wynn New York City. They're trying to build a Wynn in New York City. Basically, they have a few companies they're competing against for this opportunity, okay? It's a no-brainer, in my opinion, in regards to Wynn. This is what the building will look like, right? I mean, gorgeous in the Hudson Yards there. This is a view here of where it would actually be built right there, okay? I mean, my gosh. And I was talking with a member of my private stock group recently, and he was talking about, how they could run a lot of the material in on barges, because he was talking about, the fees you have to pay when you're doing a construction project, when you're going in New York City like that. And he said, that could be a potential big cost savings. But the moral of the story is, as the CEO puts here, as a leading designer, developer, and operator of premium gaming resorts in the world, Wynn New York City will attract luxury and aspirational travelers to our destination resort in Hudson Yards. Wynn guests consistently spend more when they travel. Yes, fact. That results in greater tax revenues for the city and state and more spend in the local community. Facts. All with less foot traffic than might be required at other resorts. Facts, okay? The bottom line is, if Wynn doesn't get this, okay, New York City's clueless. The bottom line is there should be no even debate about who gets this project. I've seen the other companies, they're not as well capitalized, and they're just, to be as respectful as possible, they're a joke compared to Wynn, okay? It's a night and day difference. If you understand this sort of business line, like, you look at this and like, it's a no-brainer. Like, if you're New York City, you let the Wynn build there. That's like the most Manhattan thing you could possibly do. You go with anybody else, it is the worst decision they could possibly make. And in terms of this opportunity for Wynn, I mean, we're talking about, it's a granddaddy of them all. I mean, there's nowhere there's bigger money than Manhattan. And I can tell you, I mean, the amount of, who's got the most billionaires? We know New York City does. Who has the most people that are worth $100 million plus? New York City. I mean, the amount of big money that's going to be in those high limit rooms. Oh my God. Not that it's just traveling. That's the thing. It's not just going to be people traveling in New York City, staying at the Wynn, spending that money. It's going to be billionaires, people with tens of millions of dollars, hundreds of millions of dollars, that looking for something to do. And they're like, let's go play some high-end whatever, okay? Oh my gosh, like Wynn's going to make a fortune. Now, I've seen a price tag out there in regards to this of $12 billion, okay? I don't think it's going to cost Wynn $12 billion out of their pockets to build this, okay? I think it's going to be much less. I believe the $12 billion number refers to all the development in general, because there's a bunch of other development that would be going alongside with this property as well that would not be Wynn-owned projects, okay? So I believe that entire encompass. I think something like this, my personal opinion, it's going to cost a lot. My personal opinion is Wynn, realistically, is probably looking at, I would say, 5.5 billion. That would be my guess, okay, in terms of actually doing this, completing it the right way and doing it the way they want to do it. My guess is 5 billion, but we'll see. Okay, 5.5 billion. Now, in regards to Wynn, here's the deal, okay? Company trades at a forward P of 20-ish, right? And we got Macau still coming back, right? Macau's still in comeback mode. Like 2023 was just kind of the reopening of Macau, and that's still coming back. Vegas is set up phenomenal now at this point in time, right? Because now we have the F1 each year. Now we're attracting so much more convention business. It's not just, the 65-year-old that needs to go on vacation or the 22-year-old that wants to go to the club, okay? We're attracting like year-round type business now at this point in time. We just had the Super Bowl this past year. Don't be surprised if we have the Super Bowl again in a few years. We have sports teams here now, like major sports teams. So when I look at Vegas is set up phenomenal. Macau's coming back, and we got two potential huge projects. I mean, the Middle East one there, that's already broke ground from my understanding. And the New York City opportunity, which should be, I would say, like an 85% probability Wynn gets that. I mean, my gosh, that's going to be huge. So that's so exciting for, like, let's call it the end of this decade, right? Let's call it the 2027 through 2028, 2029 type time frame. And then rate help should affect Wynn very positively whenever rates do start going down, which they're likely going down in the next 1 to 2 years. And that bodes very well for a company like Wynn and a stock like Wynn, because then people feel more comfortable owning a stock like that in a lower rate environment overall. So yeah, Wynn Resorts, love it. Number 7. This is a very low price stock. Oh, it's a low one. Oh, I'm talking like $7 a share. Do you know what it is? It is Sofi Technologies. Yeah, I really like Sofi here, okay? So right now in the public count, I have about 3,000 shares in that particular portfolio. I want 10,000 plus shares. I want 10,000 plus, baby, in the public count here, okay? It's a very new buy for me. We're up like 5% so far. Like, for me, 5% is nothing. Like, I'm not looking at this as like 5%, I got to go take my money and run. I think this has tremendous opportunity over the coming years. I think they're very well positioned. I like what Anthony Noto is doing running the business. And I spoke about Sofi extensively in last month's edition, 5 Stocks I'm Buying Now, March 2024 edition. I believe Sofi was the very first stock I started talking about in that video, and I believe I talked pretty extensively about Sofi. So if you want to hear my very in-depth case, check out that video there on the channel, okay? Appreciate y'all joining me as always. Thanks so much for being here, folks. Once again, pinned comment down there is to get access to the $69 one-day sale April 15th. So one-day sale, okay? Access to my best course ever, $997 value, ability to see the stocks I'm buying and selling each week in that portfolio, access to that Discord chat, pinned comment down there. And once again, once you put in your email, phone number so you can get the deal when it comes out April 15th, make sure you set up that Patreon account right after. Very important. You can't get the deal if you don't have a Patreon account, okay? And that's free to do. You can do all that, okay? Much love and have a great day.